Good morning, everybody. Time for our daily plan. I'm not sure where Vol Trader are. Ben Andre had some foot surgery, so he's kind of been indisposed for a while. And let's get right to it. Comments. Good morning. Okay, so let's see. So right now we're messing around 6,900. Let's call I'm looking at 6890, 6,900 as a pivot, and I'll show you why in a minute. A quick recap of yesterday. Once again, breadth was strong. The day before was 80, 20 advances, decliners. Yesterday was like, whatever it was, 2 to 1. Let's call it advances versus decliners. RSP, IWM, transports, all that stuff, making new highs. If you believe Dow theory, well, then transports are confirming, et cetera, et cetera. Now, granted, Dow theory is like 100 years old or whatever. But anyway, maybe the new transports are the semiconductors, in which case they're also near highs. So let me I'm going to pull up my note. Way I'm kind of a tad more structured, although you guys know me, I'll kind of ramble. Okay, so yeah, reset to where we were last week. Let me talk about that. Let's talk about that idea. And let's start in volatility just broadly. VIX reset back to 16. VVIX popped up to 100. Volatility reset to under 100. 9-day, the VIX 9-day difference on whatever the debacle day was. The VIX 9-day actually was a little bit higher than the VIX, but it was up 15 or more than 15% versus VIX up 6%. So near-term stress, they're worried about Greenland, they're worried about Japan, whatever they were worried about near-term. Okay, so now the difference between the VIX and the VIX 9-day is normal-ish. It's still, the VIX 9-day is still a little high based on the way I've been tracking it, which makes sense considering we have the FOMC coming up next week, and there's still lots of uncertainty floating around, actually. I probably would, I'm kind of surprised it's not a little higher. Well, actually, so the VIX is going to be near 16, normal-ish VIX. So these, so it's kind of a reset in the volatility space. A quick comment on, I was going to do where is it? Here we go. Now, I was going to do something with my subscribers on Wednesday on correlation, dispersion, and VIX-CQ, but we went down some rabbit holes, and I had some typos, whatever. And so we went down a different VIX rabbit hole. So this rabbit hole is still yet, I still have yet to give them a tour of this rabbit hole. So this rabbit hole is a correlation, dispersion, constituent volatility, and the broad takeaway is correlation is low. So what that means is rotation. This goes up, that goes down. Microsoft is up, Amazon is down, NVIDIA is this, and things are churning around, which helps keep index volatility somewhat contained. And institutional algo trade that I don't know the details of all. I'm not an algo nor an institution. is selling index selling volatility in, let's just say, the S&P 500, and buying straddles or individual volatility, however they do that, in the bigger names. And that holds until it holds. So dispersion is kind of like the antithesis of correlation. So correlation, if we just look at this over here, it's hard to see it on this chart. But you see here, correlation was up to 20 during that December sell-off. If you remember, December low, 97.20. So what that means is baby with the bathwater. When the market goes down, everything goes down. When the market is euphoric, everything goes up. Normal in between, correlation. There should be some stuff going up, some stuff going down. And so that's broadly what we're looking at. And this is just the individual constituent volatility. What's the volatility of each individual underlying, however they weight that, Microsoft and Amazon and NVIDIA and Tesla and all that, is 38. The dispersion index is 35-ish, 3-point difference. Kind of normal, that's your IV difference. I need to do a deep dive into this as well, do a little research into historic patterns and trends. And so that's what's going on here. So that was a long-winded way of saying we reset. Okay? That was a long-winded way of saying we reset. That's just how I get there. It's kind of, we can just take my word for it that we reset. I'm just kind of showing you what reset. Okay. And we kind of reset to 3,900-ish. Here's our last week. Intraday high was around 75. Closing high was somewhere in here. I don't remember exactly where, 65-ish or something like that. Gap down over the weekend. So the week-to-date high was, where's the weekend gap down? Friday to Monday. And we gap down to where we are now, kind of round trip. Managed to make an overnight high here. Oh, that was yesterday. Double top, the dreaded double top, right around 69.35, almost at the gap fill. If we want to play TA, almost at the gap fill. As your kind of gap fill levels, depending how you like to draw your gaps. Oh, speaking of gap fills, I mentioned this in my note. This is what happens when I don't use my note. Good morning, Danny. I just want to show you this real quick. The Qs. So Qs are interesting to me, and disclaimer: I'm a bottom feeder. I'm off it early. Okay. So that said, sometimes to my peril, sometimes to my advantage. Can we go back to October on this thing? Let me see if I can find it. We've got this. Where is it? Hard for me to find it here. We've got this October level. And this October high here. And we've just kind of been struggling to get over that 625, 626 level. And we have this gap over here from the October breakout, end of October, November. We've just kind of been struggling with 626, 627, something like that. Not making new all-time highs, even when the IWM and the SPX and everybody else made all new highs. And the QQQs are suddenly like, what about me? So just kind of, for those of you that like to watch these numbers, call it 26, call it 29, call it somewhere in this gap. And I don't know, nothing scientific here is what I'm about to say. Let's just call it common sense or uncommon sense, depending on how you want to look at it. With most of the mag names down, heading into mag earnings season, it seems like expectations are reset so that good enough might be good enough. Now, of course, an individual name, they might get happy at Google or say it at Google and happy at Apple or happy at Tesla. We don't really know exactly who what. I think broadly it's set up to rotate back into large cap. Now, the other side of that argument was large cap was because it was the best house in a bad neighborhood in October, November, whatever. And when there was fears of an economic slowdown, all that kind of stuff, they were the ones that had the money. And so that's what fueled that trade, one could argue. And that now that it looks like Trump is going to run it hot, the economy is going to be booming, so to speak. Productivity numbers are good. Inflation numbers are at least not going nuts. That there should be a rotation away from big cap into more cyclical, more names like you have in the IWM and the commodity space. Okay, that's enough of my macro hat. Okay, so let's get back to what's going on today, Doc. Gotcha. Okay, so we talked about the VIX. Okay, narrative roulette. Intel disappointed. They beat, but their guidance, whatever. I don't really care why. But we have the TikTok deal with Oracle, whatever. Does the market decide they like that? Trump, the deal maker? I don't know. Versus we have these severe winter storms. 40 states are about to get snowed under with blizzards and with, including where I am, actual minus temperatures and problems getting natural gas, getting gas to those areas because of the icy roads and whatever. So we have that narrative versus geopolitics, Iran, Trump, wildcard, pick your poison, narrative roulette. Under the hood, like I said, IWM transports, here, let me make it even bigger. Under the hood, IYT transports, equal weight, IWM making new highs, Qs, that fair gap thing, IGV software kind of got to bounce. And so here's where we are. Okay, today we have University of Michigan at 10 o'clock, nothing else. We have some residual earnings floating in, Supreme Court tariff verdict. Okay, another narrative. Supreme Court tariff verdict. Well, let's say the Supreme Court strikes down the tariffs. Tariffs are basically seen as potentially inflationary, keeping prices up. So that's a good thing on the inflation front. However, that's a lot of revenue coming in that the government doesn't have and Trump is going to spend anyway. So that's inflation can be kicked down the road. If we're spending the same, but we're making less money, then we're accruing a bigger balance on our credit card, our national credit card, the national debt, that we have to pay off at these high interest rates. And then interest rates, the 10 years going to struggle. Where are we? 4.2, 4.1. 4.3 or 4-ish, I forget exactly where, it was sort of the September high, something like that. So we've got that whole narrative. So we got all that going on and we have to trade 0 DTE. Okay. So now let's go to where we are on the chart. Levels and lines. So this is the bottom of the expected move. When I looked at it earlier, it was around 68.70, and we had a feature at 68.70 yesterday, and systematic volatility. Sellers came in and sold 68.70 puts yesterday. I doubt they'll be there today. They'll probably be closer to 50-ish, I'm going to guess. The top of the expected move is right around 68.40, 45. Call it the gap fill area. So that's one area that we should stay within broadly. Doesn't mean we will. Should. 20-day moving average is around here. Here's the 20-day right there. So 69, 11, 92, if you believe them. So we kind of close basically on the 20-day. The 50-day is down here, 69, 60, whatever that is. Call it 68, 38, 35, 40, kind of down there. Roughly where the bottom of the EM was from last week, we undercut it, and now we're kind of in the lower third of the expected move for last week. The expected move for next week, I have it on the thing. We'll pull it up in a minute. I'm just going to guess it's going to be somewhere around 68 and somewhere around here. It's going to basically be in the range it's recently been in. But we'll see, when I get the numbers this morning, when the market opens. Okay. So next Friday, 67.95, like I said, 6,800, 67.50 if you want, and 7,015. Let's say 70.50. Let's say 67.50 to 70.50 if we want to go past the ranges. FOMC next week. Okay. And here's got some of the ranges I talked about. The 5-day range, including last Friday, was that big? Okay. Tradable translation, 68.50 and low. Okay, so now we have to get to, here's where we are. 68.50, we got a box. Positive gamma, market goes down, dealers buy, market goes up, too far, they sell to balance this out. So this is the big box below, like a Walmart superstore below. But it's not clean. It's kind of fishbony, so it's not great. But a lot of this is the other side of these. These are spreads, 5 wide, 10 wide, whatever. These are spreads, so that you expect the other side to be there like that. So over 68, so we have the 68.55 negative gamma. Like if this part of the box breaks, that is a possible target. It's also a possible source of decay fuel, as these options, if they stay decay, and market makers buy back the shorts associated with this. Also depends on what VIX does, what volatility does. Okay, so we got that over here. So if you kind of do a basic vector resolution, so you have this pushing down from around where we are now, we're kind of right at the edge of this box. Say we get under it, 68.95, whatever. We have a vector resolution somewhere around, 68.70-ish, somewhere in here, where we would expect buyers to show up, because also the bottom of the expected move. Up on top, if we get over this 60, over this positive gamma stickiness, which is, let's just do it a little, I can manipulate it a little bit more. So 68.90 to 69.05, where we are, we're just kind of in this little zone. If over 69.05, shoots and ladders, ladder up like we saw yesterday. Almost, is this yesterday? It looks almost like yesterday. I don't think it is, but it looks a lot like it, doesn't it? Okay. Hold on, somebody's calling me that knows I'm doing this, so it might be important. Hold on. Sorry about that. Uh, no, that was me. I muted it because I had a call that I thought was an emergency. It turned out it wasn't. Okay, sorry. Um, so here, so 68.70, kind of the bottom of the expected move. So we have a zone from here, from 68.70, we'll call it, up to 69.45. And we have this, right? That's wrong. No, that's wrong. That's wrong. I don't know if that's yesterday. That's wrong. I had the right thing on before. That's right. Okay. Yeah, that was a screenshot that we saw. So 68.90 up to 69.05, kind of where we are, a little bit sticky. We have this whole little sticky zone here. 65 to 9 to 05, but these are small numbers, 400 contracts, 100 contracts. These are small numbers. So this gets transacted away intraday. People buy, people sell, and this stuff gets eroded. Okay, so over 69.05, shoots and ladders, ladder up toward the gap fill, 69.40, 45, ladder back down, approach here and bounce, get sucked up here, 30-ish, whatever, 35 yesterday's high. And this pushes us down, approach here and bounce, then follow down, stay here as there's transactions here that kind of influence what goes on. To the downside, if we have a weekday, most likely downside is somewhere in here, 85, 90. We close at 15-ish, 13. So if we end the day at 68.85, that's a pretty big drop. That's a pretty big drop. That's what, 30 points, 0.5%. So 0.5% drop puts us down around 85. 1% drop ish, we'll call it 60 points, puts us down where, let's just call it, let's just say 65 points would be right. So that would put us right around down there, 68.50. The path you showed, yes, that's very accurate. Thank you. That's what I strive to do. That's what I strive to do. Today's a little messier. Our first question is going to be, what happens in this zone? And do we get stuck there? Do put buyers start to come in and start buying near the money puts at 75? how do we open, University of Michigan consumer sentiment, and plus we have going into the weekend. This is yesterday's. I don't know why it didn't upgrade yet. It didn't update. Is that correct? Maybe it did update. Maybe no, it's not correct because these days obviously didn't happen yet. Okay, yeah. So what do we see? Let's look at the colors. Free to move around the cabin anywhere in here. 90, 70, stall up around 50. In here, the red is potential magnet kind of stuff, 6910, 6930, 6900-ish. We start to get a little bit of buying, but the colors are all light, nothing dramatic. So not a lot of help from gamma. When gamma exposure is high, when there's 5,000, 10,000 contracts, 3,000 at a level, the hedging response to hedge out 3,000 contracts is more than to hedge out 300 contracts. So when we have small gamma, it's not like market makers don't hedge, they just don't have a lot of hedging to do. So then we have to rely on TA, on Fibonacci, on depth of book, on auction theory, on whatever you have to rely on. In addition to this, it's just don't torture the data. If it's not there, it's not there. So that's that. I think I'm kind of wrapping up. Let's see. Let me see. Okay, so we just went over the box. Okay, so event vol still paid into the FOMC. Headline data snap, VIX sits at a calm 16. So that was kind of a little bit of, not exactly sarcasm. I mean, 16 is 1%, is sort of in my brain a little standard VIX. And okay, we're going to grind higher. We need real buyers to come in, especially with, as I just said, gamma is thin. We need real money buyers, institutions, pension funds, or maybe Selena needs to come in and and allocate 500 million. We need real buyers to come in to bring the market up, or we need call buyers to come in, speculation ahead of earnings, ahead of FOMC. Otherwise, we just real demand, real money. Rotation remains a tail, broad tape. Hold. Let's see what happens with QQQ. Qs have been lagging. Let's see if they continue to lag. Let's see if the same theme goes on. Oil is interesting with the Iran, whatever. I still think something's going to happen in Iran. So do a lot of other people. So that's your possible headline risk into the weekend or whenever. Okay, let's take a quick look at, because this was an Intel covered call that I did when Intel was like 40. I sold an at the money call. Came out to like an 18% or 17% if called away. And if they get called away, I'll take my 17% in whatever months it was, 4 months. If they don't call it away, well, then that's fine. I own Intel at a cheap price. I think my cost adjusted basis at Intel for this was like 25-ish, mid to high 20s. Okay, that's what that is. I do covered calls as income plays and stocks I want. Okay. So let's take a look at 0 DTE. Okay, so not bad. There's juice in the juice bar. So I always like to go back to here. Now let's look at depth view to get like the actual numbers. Let's see what we got going on here. Okay, so we have 2,000 here at 68.50, 2,600. That's pretty decent. between us, we're here now, and 68.60, there's not a lot. This is also 68.10 or 6800 down here. I've got the luxury of all these blockers and all this transacting, and it's outside the expected move. So clearly that's the first place I'm going to look and see if I can steal something. And I can't. You know, if I could steal something down here, but I can't. So I'm not trading for 26. Okay, so now I got to go back to the 68.10. Hang with these guys. Let's see what happens if I hang with these guys. Let's just see. I like to do 45. See, there you go. I'll take it. Now if I just hide right below them, 40. I like that. I'll put in 1 at 45. I'll put in 1 at 55. So I'm betting on this level, 32-point expected move from wherever we are. We're at 6,900, 68.95. So that's 2x expected move. I'm okay with that. On top, well, we know we have that gap fill area, 50 round numbers. 60 looks pretty good to me. I'd like to get 40 cents for that. So I'll put in a few over here. Be willing to cowboy up and put in one here like that for 55 cents. Why not? Let's go to the other account. On this one, I'll do it the regular way. Try and get 40 cents for that. 45, good enough. Okay, so now let's think about 5 ones. Let's see what's going on down here with 35. That's not horrible. A little cheap, 55 cents, a little cheap. You want to hang out with the big dogs at 45? That's one idea. Or play it safe and try and get 50 cents for something like this, or something like this. Try and get 50 cents and buy it back cheap, somewhere in there, 35.30 on the bottom, 55.60 on top. I wanted to be aggressive. Let's just pretend we're aggressive. 45.40 on the bottom, and I'm not putting in my password for you guys to see. Not that I think that anybody would do anything, but oh, I forgot to mention somebody posed on me on Telegram and swindled a subscriber out of money, talking about my crypto algo and my private whatever crypto algo. Yep, it's going to be worthless. That was the idea. I mean, I didn't know if they would take it away. I was going to be fine with that too. Potato, potato. You know, my cost in that was pretty low. Yeah, 60, 50 is a little close. Are you in the 50 for today? It'll probably hold. Let's go see where 50 is. It's right at the one standard deviation. It's a little close, but you'll probably be okay. I might, if I were in that, might try to like get out at a small profit and kind of keep my eyes on it for the rest of the day. If I could get out at a scratch and say no harm, no foul, I might do that. I want to see how the day opens. So one time, this goes back to 2018-ish, maybe during Vomageddon, actually. I had one of those days where I lost, I don't know, 50K, 100K, a really bad day. I was talking to a trader friend of mine, and he said something like, when the market gives you a parachute, take it. Because there was points during the day that I could have gotten out with a manageable loss. I didn't take it. And I was kind of figuring out how I'm going to manage risk going forward. Those days I was doing between 50 contracts a day was a minimum. I sometimes have 200 or 300. I was kind of rolling it heavy. I didn't have the data I have now. But I did the old school chain hunting, looking at open interest, looking at delta, looking at expected move, and whatever bands I use, volatility bands. And so in Florida, I have a little green army man with a parachute on him. When the market gives you the parachute, take it, just as a reminder to myself. Or as they say, when you get on the wrong train, get out of the next stop. Now, I'm not saying that that's the wrong train or not. It's a little early to say, but I tend to like to be a little cautious. So anyway, so 45, 40 on the bottom. Let's just go one more aggressive one. And oh, how about the 45, 45, 80 cents? Okay, I'm gonna do one of those two. Somewhere in there. So I have a few different 5 wides, 10 wides, whatever, working there. As far as flies, I don't know. Uh, Sit through the fake pain, right? Okay, yeah. So yeah, and I like the discussion. Okay, so your 55 is going to be worthless. You could sell again. Gives you optionality. That's why they call options options. Um, let's look at some flies real quick. I haven't really had a chance to, I got to get ready for this storm. There's all kinds of crap going on here. I have a doctor's appointment. Oh, my subscribers, I have a doctor's appointment, dermatologist, like 1:30. I have to leave here around with the snow and everything, leave here at 12:30. By the time I get back, the market will be closing ish. So figure after the euro close, I'll be starting to. Okay. So we saw that 50. Let's just see. That's a wide one. Let's see what this looks like here. 10 wide for 80 cents. See, I don't mind doing something like that. 70 cents, even better. And if it doesn't work, get out and lose 10, 20 cents. Oh, 65 cents, even better still. I'm going to put it in 65 cents and see what happens. To the top side, Let me move the strikes up. Let's make it a little wider. Let's see what that looks like. So that's a tad expensive on these lottos. I kind of like to be. I'm gonna put that in for $1, see what happens, and that's it. And I always, for my subscribers, I put in if these fill, that they fill. Not investment advice. I'm just showing you what I do. You can do what you want. I hopefully you don't get in trouble. Where is it? Yes. So, like, just for example, here, when you see these, the taster, here's examples of trades I did yesterday here live on YouTube and X. Here's the trades, and here's the closing management, whatever. Here's the trades in, here's the closes. So I'm a closer. I got 50, 65 cents. I'm out for a quarter. God bless America. I know some people don't have that luxury. So here was yesterday's 0 DTE. Time and trade 2 hours and 15 minutes. Not everybody doesn't do the same number of contracts the same width, so it has the same risk profile, et cetera, et cetera. So I think that's it. Let's take a last look at the chart and see where we are. We're right hanging around right here. And we could just as easily stay within this 85, right within this band. I'm not saying that 6850 is, so just so that I'm not sounding alarmist, is outside the expected move. Come on, you can do it. All right, we'll do it the other way. Oh, I guess came, right? 6850 is outside the expected move, and you have blockers over here, but they're above us now. You have a little bit of stuff over here. I guess this is 60 over here would be, so a little hard to say yet. It's a management question. But there's, maybe I could have gotten a profit, or maybe it's a loss I don't want to take. I can get out of break even and give myself time to reposition. Even if I would have gotten, if it would have been okay, that's where everybody's risk reward and how they trade is different. Okay. I'm going to wrap it up. Oh, I still have my coyote thing on. Getting the human scent on it to put it in the tree line to keep the coyotes away. Rachel, my beloved, is going to be putting them out today, I guess, in the tree line when she goes for a walk with the Doberman, which is the little one. The 85-pound Doberman is the little one, and the Canis Panther hybrid, which is the beast. He's the Navy SEAL of dogs. He's the Delta Force of dogs. And if you don't know what a Canis Panther is, just for fun. Canis Panther. How do I copy a link? I guess I can do this. Canis panther. Yeah, the Dobbies are smart. Canis panther is a mix of a Dobby, Great Dane, Pit, and a Black Lab, just to make it somewhat more normal. And then there's always the famous. There's a great pic of one looking like a panther. I can't find the pic right now. But anyway, Canis panther. Amazing dog. Yeah, this is the pic. Look at these guys. We couldn't dock his ears because whatever. We couldn't dock his ears. Well, look at this thing. Smart, obedient, amazing dog. Kind of a handful, though, not for the inexperienced dog owners. Anyway, enough with the dog. That's a heck of a mix, exactly. Track the coyotes, yes. Track the coyotes. That's the one that he charges into a pack of 10 coyotes. He doesn't give a, 8 coyotes, whatever it was. He just charges right into them and came back with his doggy coat torn and blood droplets on him, but none of it was his. But he doesn't recall until mission is accomplished. He listens like a Marine, but once he's on a mission, as in going out and getting them, you can call him back. He doesn't recall. Then he comes trotting back when the mission is accomplished. Now, if he's just running around messing around and you call him back, he could be 5 acres away and you call him and he'll stop on a dime and come running back. Yes, sir. Yes, ma'am. He'll come running back like a Marine. But if he's on a mission, he doesn't turn around until the mission's over. Okay, enough talking about dogs and goats and stuff. I'm going to get ready to trade. Take care, everybody.